Biden coming in as president, do you think what he expects to deliver will be delayed by all this impeachment noise we're hearing?
Well, that's certainly a threat, and that's a problem because in this country, of course, you want to make sure that the person gets a good defense, and that takes time. And they're not just going to be able to go through this. They went through the impeachment vote in that of an eyelash. Okay, that just took seconds. It's not going to be able to do that once they go into the actual trial. If they want to do it after he is out of office, it's still going to take a lot of time. That's going to take time away from the new proposals that President-elect Biden will put forth, and that will delay their implementation. And it already takes time. People forget it takes time to pass these things. They're not going to be able to pass them in February or March. It's going to take a long time anyway. And if this impeachment process drags on, it's going to push it off into next year. And again, that means that the recovery will take longer to come back. And with a stock market that's already very expensive, that puts a certain amount of risk to the stock market.
Okay, so we have investors turning their eyes to the earnings season, banks in focus as they announce their report cards tomorrow. Do you like the financial sector?
I really do, and but I also think that you could see a little bit of a pullback. It might be a little bit of a sell the news reaction to their earnings. So I think investors want to be a little less aggressive than they have been. I mean, I had been bearish, or at least cautious, on the bank stocks for almost 3 years, but I turned more bullish back in early September because I saw the bond yields were going to move up, and that was going to be bullish for the group. But the thing is, the KBE bank ETF, that's had a 60% rally since September, and as Bob Pisani just said, a 30% rally just since the election. It's a huge move, and when you get big moves like that, they get a little extended, they get overbought, and they need to digest those gains before they move back up. So my point is, even if the stocks see a little bit of a pullback, don't worry. Let them pull back. Let them work off the froth that they've kind of built up over the last couple of months, and then buy them again on weakness. But I do think that rates are going to move higher eventually, a long-term rates, as we move through the year. And this group has still got a lot more upside because it's still a relatively inexpensive group.
What about energy names? What about airlines? What's your positioning there?
Yeah, the same thing with the energy group. Again, this is another group. I mean, the XLE, which is the energy stock ETF, that's had a 57 or almost 60% rally since October or so. So again, it's getting a little overbought on a near-term basis, but it's still incredibly under-owned. It's still, people are still skittish about the long-term prospects for the energy sector. And believe it or not, I think that this one, I'm bullish on commodities in general. So I think oil is going to do well because the dollar is going to reverse itself. I'm sorry, the dollar is going to continue to be weaker, although it may see a short-term bounce. So I don't want to keep talking on both sides of my mouth, but the point is, I think energy and oil have gotten a little ahead of themselves near-term. Don't chase them, but do buy them on any kind of pullback. We are due for a little bit of pullback because they're overbought, but I think they've got a lot higher to go, and I think anything related to commodities is going to have a good year, and a full year, once we get past this kind of overbought condition.